Hello everyone, welcome to the next session, financial accounting. So today we will discuss the next problem, number 8. So here the question is same as from the previous problem, but little different. So here the customers are paying the installment value quarterly basis. Right? Now we will discuss how we are going to solve this type of problem. So now in this question that we need to calculate the same cash price of an asset from the given data. So here the 6,000 amount paid at the time of agreement, and for first installment rupees 7,200, it's payable at the end of first quarter of the year, and second installment payable at the end of second quarter of the year 6,900, and third installment payable at the end of third quarter of the year 6,600, then fourth installment payable at the end of fourth quarter of the year 6,300. Rate of interest is 20% per annum, and rate of depreciation is 15% per annum in straight line methods. So you may be having a doubt why last problem also we got depreciation, and this problem also we are having rate of depreciation, but we were not discussed about the depreciation in this problem, because here we are going to calculate only the cash price of an asset. Right? So if you are going to prepare ledger or journal entry, and if you want to know what is the exact machine price or the price of an asset, then we need to calculate the depreciation. So for this question, depreciation percentage is not required. For the upcoming problems, when they are asking to prepare a journal entry or ledger, then we require the rate of depreciation. Now we will move on to the solution for this problem. So already we have discussed the formula to calculate the interest rate. Right? So here the difference will be the installment amounts are paid in a quarter basis, right? So 4 quarters they are paying. The interest rate for this problem is 20%, but we can't take 20% because 20% is per annum. So quarterly basis means it is 1 by 4. So 20 by 4 we will get 5% per quarter, right? So now for this problem we need to consider only 5% of the interest rate. Now again we can create the same tables, and we can start with fourth year, right? So fourth year, now closing balance, and for install amount, the customers paid 16,300 for the fourth quarter of the year, right? Because fourth quarter when they are paying 6,300, the entire installment values will be paid and the closing balance will be 0. That's why closing balance we are not mentioning here, it's nil value. So fourth year, fourth quarter, we are paying 6,300, and total amount will be 6,300 plus 0, 6,300. Now interest, instead of taking 20%, we need to consider only 5% because 20% is for per annum and we are paying as a quarterly basis. So 20 by 4, you'll get 5%. So 5 divided by 100 plus 5. Right? Now we can calculate the interest, 6,300 into 5 divided by 105, you will get 300 rupees as a interest. Right? Now for principal value, 6,300 minus 300, you will get 6,000 as a opening balance, and this 6,000 will be the closing balance of third year. Right? Now for third year, the closing balance will be 6,000, and the install amount paid 6,600. So total will be 12,600. Now for interest of third year, 12,600 into 5 divided by 105, you will get 600. Now you can minus the interest and you will get the opening balance. 12,600 minus 600, you will get 12,000. Now this 12,000 will be the closing balance of second year. Right? Now closing balance 12,000 and installment amount paid for the second quarter is 6,900. So the total amount will be 12,000 plus 6,900. It's 18,900. And the interest amount will be 900. It's 18,900 divided by 5. So 18,900 multiplied with 5 divided by 105. You will get 900. Now opening balance 18,900. That's total amount minus interest. You will get 18,000. Now this 18,000 will be closing balance of first year. And in the first year, first quarter, he pays 7,200 installment value. So 18,000 plus 7,200, you will get 25,200, and the interest is 1,200. So the 24,000 you are getting, that will be the opening balance of the first year. Right now, if you add the down payment with the principal value of the first year, you will get the cash price of an asset. So here we are having principal amount 24,000 plus the down payment will be 6,000. So total 30,000. We are having that 30,000 will be the cash price of an asset. So I hope you understand this concept. Thank you. We will see you with the next problem.